What is going on YouTube, and we are back with another one. Alright guys, so in this drop I'm coming at you with a couple of plays that are set to explode. But before we get this show on the road, if you're looking to change your future financially using the stock market, do consider joining the movement by hitting that subscribe button. And if you're already locked into the channel and you know someone who could do with earning money using the stock market, do bless them by putting them on the channel. Alright guys, so depending on what plays you've got, it might have been a frustrating day out there in the markets today. Now some of our growth plays did very well today, some were flat on the day, some were down. It gets like that sometimes in the markets. As I said to you guys, we're not quite yet out of deep waters when it comes to this market volatility. Got to remember, we've just come off a string of green days, so a red day is to be expected. Now I've been through several crashes, several corrections, I know how this goes. Before we kick things off though, I want to put you guys in a bit of game, so check me out. What you guys must know is right now, the market is reacting very favorably to FAANG plays like Facebook, plays like Apple, plays like Netflix. You can see very good performances on the week for these plays. And that is drawing attention away from some other plays like some of our quality growth plays. This is what tends to happen in the stock market from time to time. We saw this happen when we saw GameStop, AMC exploding. That took attention away from a lot of the growth plays. Same thing happened when the NFTs came about. So don't be disheartened if any of our quality growth plays are down on the day. It's just temporary. As I say, use it as an opportunity to pick those plays up on the cheap, because when they climb, you will be rewarded. Now, as I say, in this drop, I'm coming at you with a couple of plays that will explode. So I'm gonna put them on your radar. Make sure you guys have got the strategy set so we can continue dominating these markets. All right guys, you know what time it is. Let's get ready for our first one. Our first play, that's EasyJet, ticker symbol EZJ. Now every week I like to put some recovery plays on your radar because there's still a lot of room for these to climb. That means there's still a lot of returns to be made on these plays. Now I like you guys getting in all the opportunities that the stock market presents you, not just the growth plays, not just the penny stock plays, but the recovery plays as well. Now for me it doesn't matter, but I know some of you guys like to see green every single day in your portfolios, and the way you're going to achieve that is by diversifying. If you're just investing in the growth plays, you are going to get those red days when the whole growth market is down. But what happens is when the growth market is down, it's the banks and the recovery plays that are in the green. So check me out on this one. You can see this play had a green day today. That's how you stay winning in the stock market every single day. Now, what you guys must remember is air travel is here to stay. It's not going anywhere. So despite the airlines being closed right now, as we move into economic reopening and travel bans are lifted, airlines are going to start opening their doors to travel, and there's going to be a lot of demand for it, benefiting plays like EasyJet. So there's still a lot more room for this play to climb. Now check me out on this one. One of the reasons why I like this play is because they're far below their pre-pandemic levels. Pre-pandemic levels on this one was around £15. They're now trading at £10. So there's a lot of upside to be made on this play. So I want you guys to get in your position in this one. You've got the green light to pick this one up. Now time is running out to pick up these recovery plays as we move towards economic reopening. Now the next play I've got for you, that's Revolve Group, ticker symbol RVLV, currently standing at $48. Now this play is set up as an ideal reopening play. They're an online fashion retailer targeting the millennials and the Generation Z. So that's their unique selling point right there. Now this play benefits not only from that accelerated shift to online shopping, but also as people increase their socializing, increase their entertainment in a reopened economy, they're gonna flock to places like Revolve. Now this play did well in a pandemic setting, so moving out of the pandemic, they're going to perform even stronger. This is a play, they have good financials, good profitability, good cash flow, and that's exactly what we like to see as investors. Now as I mentioned, this one's $48. Now they have been rising, but they've still got a lot of room to climb. Now this one's going to get to that $65 mark. When they hit $65, we're going to sell out of this play. No need to hold them longer than that, because they are going to have a couple of groundbreaking quarters as their sales increase. But going forward, you might see a dip in their sales, so we're going to sell out at their peak. Our next play, that's Cineworld Group, ticker symbol CINE. Now the US, they're already cracking on with their screenings. They started this month, and the UK have dates set in May to start theirs. Management have come out and said they can operate at 50% capacity and be profitable. So we like this, and the demand is going to be there for this play. So they should do fine in a reopened economy. Now with this play, I want to let you guys know we are not interested in holding this one long term. This play, they are not a Pinterest, they're not a C Limited, they're not a Grow Generation that have years of runway to grow. This is a play that we're in for the short to medium term until they reach their pre-pandemic levels. Also got to remember, they are holding on to a lot of debt that's going to hinder them in the future. When it comes to long-term plays, guys, we are focused on those plays that make good revenues, have the margins, and have strong balance sheets. But that doesn't stop us crushing this play in the short to medium term. So we're going to round things off with this one. That's Drive Shack, ticker symbol DS, currently standing $3.69. Check me out on this one. Performance on the day, almost 7%. Performance on the week, almost 15%. This is a strong play. Now, if we zoom out, you can see this one's showing some momentum, trying to break through that all-time high. You guys will know I've got my price target on this one of $5.50 as management aggressively grow that business and continue to roll out their golf, entertainment, food, beverage outlets. Now, this is a play, guys, that if you've been in since I called them out, we've made almost 25%. You guys know we have our first checkpoint at 25%. So a couple of more percentage points. When they get to $3.75, you guys trim some profit from this one, leave the rest to run as they climb up to that $5.50 mark. Now, when we hit $5.50, we're going to exit this play entirely. Our job is done. All right, let's talk about how we can level up as investors. Now, I'm going to talk to you guys about portfolio diversification because I've been getting a few questions from you guys, so I'm going to give you the lowdown. Now, when it comes to the number of plays you should have in your portfolio, as a rule of thumb, I say if you're a beginner investor, have up to 10 plays. If you're more intermediate, have 10 to 20. If you're more advanced, have 30 plays. So those rocking with the channel for 6 months now, you fall into that category. Now, personally, I'd much rather reduce my risk and slightly reduce my returns potential by keeping my portfolio diversified. Because remember, when you diversify, you dilute the effect of any one play going wrong in your portfolio. Also remember, you should be diversified in industries as well. We have several industries like the clean energy, the EV, the financials, the tech sector as well. So make sure your portfolio is spread nicely across all of those so you're capturing all the opportunities. And I say have at least 5 of those industries within your portfolios. Also remember, don't rule out ETFs, S&P 500, as well as a way to diversify your collection of investments. Diversification is key, and as I said to you guys in the beginning, if you guys want to win every single day in the stock market, ensure you're diversified. All right, guys, we're rocking with the channel. You know what time it is. Next question comes from Akhtar, says, what to do with restricted stocks which are down bad, but we can't average down? Sell, take the 40% or 60% loss, or wait? Now, this is a great question, so thank you for sending in. As you guys know, Trading 212 for a while now, I've been slamming the brakes down on some accelerated penny stock plays. Plays like IQST got hit. Now, my recommendation to you guys was that when the restriction places, if you're in profit, take profit, or if you're at a small loss, take that and move to the next one, because you don't want to be holding onto a play that you don't have full control over. With investing, guys, it's all about having maximum control. So as you mentioned, you can't dollar cost average down on these plays. So if you're stuck until Trading 212, release the chains of these plays. Now, a lot of these plays, you've got to remember, the reason why we jumped into them, the reason why you jumped into them, you did the diligence on them. That means they have good catalysts coming up. They have good futures ahead of them. Several growth opportunities to push that stock forward. Remember, guys, with investing, we don't just invest for what the stock is doing today. We invest what that stock is doing in 12 months time, 24 months time. So they're going to be a completely different business by that. Now remember, guys, when we invest into a company, the capital we invest, we do not need immediately. So we don't need that to fix any house repairs or pay any rent. That's money we can just leave in the company comfortably. So I would say if you're down that much, 40 to 60%, you leave that in the company. Let that run. Let Trading 212 lift those restrictions, because it's very likely those plays will rebound and you'll get a much better return on your investment by selling out now at a massive loss. So just stay patient with those plays. Just keep focusing on other plays that are out there in the market. Leave that money in the play. You'll get a better return down the line. All right, guys, that wraps things up. Do hit the like button for me. And if you're new, join the move by hitting that subscribe button. Now, as we progress for the rest of the week, you guys know I'm coming at you with a ton of plays to ensure you guys are prepped and ready and continue dominating these markets with me. So I'll catch you in the next one.